Welcome back. You're talking to us on a Wednesday morning, a little too early in the week, but we have an important discussion lined up for you. The management of Allied Blenders and Distillers joins us to discuss a whole host of things. One of them, the Maharashtra excise duty hike as well, but more importantly, the business outlook of the company. The Managing Director, Alok Gupta, joins us in the studio. Thanks a lot, Alok, for joining in.
Thank you very much.
Let's address the Maharashtra excise duty first, because that was something that was discussed by everyone by and large. You as a player could give us two basic numbers. One, what proportion of your revenues comes in from Maharashtra? And because of the excise duty hike so far, what would be the increase in end user prices?
So our share of volume is sub 10%. The way we are reading the excise policy for now, it will definitely have an impact on volume. We could see about 20 to 30% reduction in volume. But there is also an opportunity on MML. And I think we are well positioned to take advantage of it because we have capacities to be able to do that. However, there is a bit of a volume margin balance. That is the tightrope that we are currently walking on. As the policy contours are not fully known, I think it's difficult to figure out if there will be any margin impact. And therefore, we are at an Excel stage. We believe there could be a solution, but the market will definitely go through a significant change in terms of the product mix.
So how much will the price increase by because of this excise duty?
Well, if we were to take current EDPs and just pass it through with new excise duty and distribute on retail margin, the increase should be north of 50% in many segments.
Got that. Hi, Alok. Good to see you in the studio, and congratulations to you as well as the team in terms of the listing. I was just doing some rough math on the Officer's Choice, which is your key brand. You know, if someone bought 2 bottles a year or so ago, then good for them. They had a good couple of months. But if someone bought the stock instead of that, the 3rd bottle would be free today.
That is true.
That's on a lighter note. Yeah. Let's get a couple of numbers out of the way then. You know, in terms of volumes, how many cases are you looking at to sell this year? Your realization as well per case is roughly in the vicinity of around 1,000 rupees. So how do you see both these two numbers headed? And obviously, premium and above is going to play a bigger role. And you'll have said in the past as well, you're looking to increase this share.
That is
what?
So essentially, the way we have looked at our legacy portfolio, which we call as a power portfolio, and the new brands that we are launching, on Officer's Choice, which is our flagship brand, the focus is really on getting the gross margins right. We are north of 40%, and we want to maintain those margins. So the guidance is a single-digit growth. Okay. On the P&A whiskey side, we've got 3 beautiful brands. We've got Officer's Choice Blue, Iconic, and Sterling. Iconic, as we know, has been a blockbuster. It's been, in 2 years in a row now, the fastest growing spirits brand in the world. We did 5.7 million cases last year. The brand continues to grow, and we will see over the next few years high rates of growth. So we expect market share consolidation in what we call as P&A whiskey. We've also launched a brand called Golden Mist, which is a deluxe brandy in the southern state. So overall, what we're looking at, volume to grow in double digits, but value to grow mid double digits.
All right. So
and Iconic, as you said, 5.7 cases, if I got that correct.
5.7 million cases.
Million cases. So if that's going to grow at a faster clip, where do you see that number headed? And you know, we just have the total, the entire volumes last year was around 33 million cases. So where's that headed?
So if you ask me, mid to long term, this brand has enough legs to be a market leader. So we are currently at sub 6 million. So there is enough and more juice left in terms of what market share this brand can get.
I want to talk about your product share in general, because India, yes, it's a brown drinking country. We have almost 80-85% of the revenues for the country coming in from whiskies as against the others. But the others are also growing fast. In your case, your revenue from whiskey is 95-96%. You have the Russian standard vodka. You're talking about gin. You're talking about other players as well. So what would the product mix of the company look like, and what's your aspiration here?
First, a quick data point. About 95% consumption in India is dark, which is brandy, rum, and whiskey.
Got it. Okay.
Of which whiskey is 65, and roughly 5% is others, all whites put together. And these ratios have not changed over the last 30, 40 years. Got it. So pretty much, I mean, plus minus 1%. So I think our love for dark spirits has been there for the last 50 years. We love whiskey. Now we love whiskeys of all kind, not just Scottish kind, but we're also drinking a Taiwanese and a Japanese and a Thai whiskey and a German whiskey. So I think we just love whiskeys. So that's really the broad construct. What we're trying to do here is that we have a powerful portfolio up to, let's say, 1,000 rupee price point. Then between 2,000 to 5,000 rupees price point, which we call as super premium and luxury, about 3% volume of the 420 million cases last year is there, but that's really where the bulk of money is. So all the brands that we're talking about, whether it is Russian Standard, whether it is Woodburns, whether it is Zoya, whether it is Art House, whether it is Pomori, they're all operating at a price point of 2,000 to 5,000. and roughly 98% of the luxury volume is between this price point.
Got it.
So going forward, the focus is on what we call as the luxury segment. And just a little trivia, for every 1% volume gain in luxury for us means 9% value gain.
Got it.
So the impact is just disproportionate.
So make it simple. You are at around 31 million cases as of last year. You had given us a roadmap to 50 million cases. By when do you reach there? And once you reach there, how much higher will your realizations be versus last year?
So we are 33 million cases last year.
Yes.
We had said that we will go to 50% P&A. There was no guidance of 50 million cases.
Yes.
The idea was that we'll go to 50%, and I think we will hit the 50% P&A in the next 3 years.
Okay. And what will your overall realization look like that time?
So we should see overall realization, let's say on an annualized basis, it should be improving by at least 2.5-3% year on year.
Okay, all right. Let's talk about market share then. Officer's Choice, I think it's holding on to a mid 30% market share, if I got that correct. Right. Can you hold on to that? Point number one. And point number two, debt reduction as well. What is the updated net debt in books? I'm looking at the finance cost. I think that's come down a little bit. RBI's cut rates as well, so that gives you further legs. But what kind of a debt number should we be looking at by the end of this year? And interest cost as well, I think, should come down. Yes.
So Officer's Choice has about 38% share. We are quite focused on maintaining a gross margin. So what we'll see is a profitable growth. And the brand will hold on to its market share, but importantly, keep delivering on the margins. On the interest cost, pre-IPO to now, our interest cost down about 25 crores a quarter.
Yes.
We expect this to come down even further. As far as this financial year is concerned, we went from last year H2, we were already positive cash flow. This full year, we are positive cash flow. So now we are generating enough cash flow to be able to sustain our growth capital need.
Yes.
Right? If at all there will be borrowing required, that will be for any capex and M&A that will come along. But the business is now going to generate enough cash to meet its own needs.
Is there any M&A on the cards?
Well, I think is there anything that will announce in the next couple of months? The answer is no, but I think we will stay on active lookout if something comes across.
Okay, and if you want to guide us in terms of which part of which segment are you looking at if there is going to be some M&A?
So on the front end of the business, it's clearly going to be in the luxury space if something comes along. And on the backward integration, if a interesting raw material asset comes along in a large market for us.
You know, one thing that we've noticed you've done ever since you've listed is you've used your listed company clout to negotiate better deals with some of your suppliers and vendors. How much has that impacted your working capital, your margins positively? And how much more are we seeing in terms of margin improvement from here on?
So FY24 to FY25, we have seen a 6% improvement in our gross margins.
Yes.
50% of this has come on back of what we call as a rate reset. I mean, our vendors were very, very helpful during our pre-IPO phase where we had a bit of a working capital crunch. And essentially, we renegotiated our rates with our vendors. And we have been able to improve our gross margin by about 3% purely on rate reset. About 2% has come from internal efficiencies, which is in terms of where we are buying, how we are buying, what we are stocking. And about 1% has come on back of better commodity cycles. So of this 5 and 6%, I think 5% is sustainable, and we'll see it, in the years to come by. We don't see any change from a working capital point of view. From number of days payable, it's sub 30 days, and we're quite comfortable where we are.
All right. I'm looking at FY26 revenues basis, all the things that you're saying so far. A little over 4,000 crores is a possibility.
Yeah, I think it's a reasonable guidance that we should be in and around that.
With around 13-14% margins?
Well, I hope so.
And earlier, I recall you'll have gone, most of your guidance has been achieved, but the bulls on the stock will want to know whether you maintain that guidance of close to 5,500 crores of revenues, say in the next 3 years, as well as margins in mid-teens. Holding on to that looks like a possibility.
Well, we exited at about, let's say, 3,600 crore last year.
Yeah.
Our guidance is that we should grow our revenue about 15% year on year.
So then mathematically
we'll get to a number.
All right, take that point. Thank you so much for joining in, Alok. Wish you good luck. And as they say in the alcohol industry, cheers. I would know that, but I do definitely.
I can only say drink responsibly.
Absolutely. And the bulls and the bears, that's about the market, right? Some drink in celebration, some in, But anyways, thanks a lot for joining in.
Thank you very much for your time.
Well, time to slip into a short break. On the other side, we'll focus on some stock-specific action. We'll also track the markets for you. Don't go anywhere.